So the first thing between stock and options, I'll still keep monitoring. If you have any question, you can text me, you can raise me hand, and then I will give you a opportunity to talk and ask your question. I just want to make the thing simple rather than just texting or these things. So if you can raise the hand, even I can come. How this session different that the last one? Yes, Tariq, I will be uh, I will be recording this webinar also, so you would have the recording. How is it different from the last one? In just for the information for everyone, I have done the last session. In that session, we discussed about the investing. So for investing, I discussed which kind of company you should choose, what you have to look before you start investing. So there is a difference between investing and trading. Investing means you don't need to spend a lot of time during your daytime. You can just actually you can just buy the stocks, keep with you for some longer period of time, like 1 year, 2 year, 5 year, and you just enjoy the dividends which company give you quarterly or some company gives monthly. So you enjoy the dividends. You don't worry about if stocks are going down or stocks are going up. You don't worry about that, because if you have bought the stock at the lower price, for example, if you buy the Suncor stock at $30 and then you are keeping them, even though the stocks goes to 20 right now, but you know that you don't need to sell it, you are enjoying the dividends, so you are not worried about a lot of stocks going down or up, but you are making some money on the dividend side. So you keep the stock for a longer period because you know that the Suncor will come up. So when it come up, so you are getting the stock price difference profit as well, and you are getting the dividend also. But this is your investment for a longer term of time. But for short term, you buy the stock and you sell it, making profit. So for example, if somebody buy the stock in $20 and when it goes to 21, you just sell it. So you are just making money. Maybe a lot other as well joined first time. Yeah, so I'm just repeating what we have. I understand, Nishant. So I'll try to keep at slow and lower level so everybody should understand. Please mute yourself. Who is unmuting? Nasir. So I'll try to keep it at a lower level so everyone can understand. So where were we? We were discussing the investing. So investment is when you see the company performance, when you're confident that whatever happens, company will eventually go up. So you keep the stock for a longer period of time. You don't worry about the day-to-day trading, day-to-day stock price variance. But the trading means you buy the stock at a lower price, like $20, and you are not waiting for a month or for years. If a stock goes to 22, you will sell, you will make some profit, you stay, keep your money with you. You're not worried about dividends. So this is the difference between the investing and trading. So Tariq, I believe I'm able to answer you. Lose the money if you keep those stock, even they are down. So you're not losing the money even if it's going down, because eventually it will come up. But that is the risk even for an investing point of view. If stock stays at lower point for a longer period of time and you need your money back, so then you will be selling at a lower price, which is a loss to you. But it is a long term. For a short term, it's called trading. And now trading can be divided into two main elements. One is a day trading. Day trading means someone buying stock in the morning and he's selling his stock after 1 hour, 2 hour, or towards the end of the day. But the day trading normally means you buy a stock any time in the day, you sell at any time in the day. At the end of the day, you don't have the stock with you, you have the money. Either you lose the money or you make the profit. So this is called day trading. In the day trading is normally based on the technical analysis, not on the fundamental of the company's strength. And similar for the second term in the trading is the swing trader. Swing trader means they are not the day trader, but they buy the stock when the stock is at the lowest level as they think of, they as per their analysis, and they keep the stock for week or two or month. When stock go to its peak, and they sell at the peak. So for example, someone buy the stock at $5, which is the lowest level, and he sell the stock at $10, and $10 may come in 2 days, in 5 days, in a month. So he make the difference of the price as a profit. So this is called the swing trader. Swing trader is when you actually buy the stock at the lower and sell at the higher. So these are two trading types. So you need to understand that. But as per my experience, generally, uh, the guys doing the day trading ended up in the loss because they are just on the fundamental basis, and you never know. You buy the stock and suddenly it goes up. For example, last a week before, there is a stock which is called uh, let me is TBLR, something like this, TBLR. That stock was trading at $3, around $3. And suddenly, that stock went up to $110. So at $110, and next day it came down to $30. So in day trading, you never know, somebody is buying too much stocks and the price go too high, and this is a fake kind of pump to the stock, and generally people lose that money. So Tariq asked me a question, why Tariq or Ali. Tariq, you are asking why this TBLR went up to 130. I don't know. Nobody knows. But I know that somebody bought 40,000 shares within few minutes, and it went up to 130. Probably the guy uh, who is the owner, or some CEO of that company, he just wanted to make stock higher. So this is the game normally in the stock market people play, who has the money. If they want to dump the stock, they just sell 100,000 stock at a time, and price goes, yes, LRTB, yes, yes. So this is happens. This normally happen during the day trading. So that is the reason it is more riskier, but it is also profitable if you actually manage your analysis, technical analysis, in a good way. So we will talk about little bit. So let's talk about first on the basic objective for today's training. So what happens? There are stocks and options. In the stock means like 1,000 stocks you have, and options are not the stock actually. It is a derivative of the stocks. So let me give you example. Some companies allow that you don't own the stock, you don't own the stock, but you can buy the option for some period of time. For example, like stock, you can buy the option for 3 months or 2 months. The option means you don't have the stock, but you have the leverage to sell the options. If the stock price goes up, your options price go up, and rather than buying the stock, you are making money from the difference of the stock price at any point. So these are called the options. So options are not for long term; they are always expired. So the benefit of options is, if you think, I'm going slow, Mitch, so I want to make sure that you guys understand this. So for example, there is a stock of $100, and you want to buy that. For example, like Facebook. So Facebook stocks are at very high cost. I believe it is around $200 somewhere. So everybody would not be able to buy Facebook stock, or maybe uh, a a bulk of the stock is hard to buy because you need a lot of money. But there are some options. In the options, if the stock price is like $100, you may be able to buy the option of per stock at $10. So if stock price goes from 100 to 200, and there were no indicator why it happened. Um, so if you buy options, and you will get the option at like $1 or $10, depending on the price of the derivative stock. So if stock price goes from 100 to 200, your option price will go, uh, maybe it may go from 10 to 15. So just assume you are able to buy, you have $10,000 to invest, and the cost of the stock is $100. So you would be able to buy 100 stocks, and if it goes to 200, you would be able to buy, let's say not 200, if it goes to 120, the $20 difference, so you would be able to sell them. So from 100 stocks, $20, you are making 20 multiplied by 100, $2,000. On the other hand, in the option, for the same stock, the options are available for $10 per stock. So I have $10,000. I would be able to buy 100 options. So if stock price goes from 100 to 120, my option price would also go from 10 to 15 or maybe 16, it depending how quickly it goes to 20. So if, let's say, if it goes to 15, so you bought 100, no, you got 1,000, yeah, you bought 1,000 options, and now each option price goes from 10 to 15, the difference is $5, so you are making $5,000. So if you buy the stock, you would be able to make $2,000, and but in the options, you are actually buying virtually 1,000 stock for certain period of time. After that time, the option will expire. When So I told you the advantage, but disadvantage of the options are, if you buy the options and price doesn't go up, the stock price start going down. So when stock price goes down, your options will also go down. So if you bought option for $10 per stock, and now it is $7 per stock, so either you sell at 7, and if you are keeping till the option expires, for example, you bought the stock option today, and the expiry date is 15th of May. So by 15th of May, if you haven't take any action, so your options will expire to at zero value. So whatever money you spent in the option will become 0 automatically. So you have to take any action before your expiry date. Either you sell it at a loss or a profit. If you don't do that, you will lose your whole money. That is the difference between the options and the stock. So when I'll show you the screen. The presentations are not too much. Mainly I will be discussing on live screen. So just for your understanding. So for example, if there are 1,000 stocks in the option, you will see contracts. So they say contracts of each contract has $100 stocks under that. So when you buy the options, you may see 10 options. So 10 option means it's a 10 contracts. So 10 contracts means each contract has 100 stocks. So actually you are dealing with 1,000 stocks for your option trading. That's how it works. So I will show you on the screen. Bear with me for that. But I wanted to discuss the stock and option at the beginning before I start discussing your accounts possibilities, because a lot of accounts depending on the stock and option prices. So there are two terms. Yes, Atif asked me if this is the same thing as shortening. Yes, in the options, puts means when you think the stock will go down, you buy the put option, and I will show you on the screen. So don't ask me the question how to do that. So I'll show you on the screen. So when you think that the stock will go up, so you buy call options. Call options are the options when a stock goes up, your call price goes up as well. But if you think that a stock will go down, so you buy the puts. It's the same thing, no difference. There would be a price difference depending on the analysis, that if market is thinking that stock will go up or down, on the basis of that the price has been set through the market. But puts are when you think that stock will go down, you buy the puts. So in that case, listen carefully. In that case, if stock price goes down, your option price will go up. So you will be making money on that, even stock going down. So that is the reason, if you probably have heard that many millionaires, they make lot of money when stocks goes down, when market goes down. Even in the in recent market slowdown, I know couple of guys in the news, they become millionaire because they have some ideas when the stock is going down, when the market will be crashing, they become millionaire. So I'll explain by example, Salim and Tariq. I repeat. For example, the stock price is let's say stocks are being sold at $10. You are assuming that your assumption is stock will go up. So there is a market price for the same stock XYZ, whatever I'm taking just example. Bear with me. So if the stock price is 10, you will when you will see that options, the call options, you might be able to find per stock you are paying $1. If you pay $1, you will buy one stock, but you will not be able to buy one stock. At least you have to buy one contract. One contract means 100 stocks. But this price which you see is for one stock. So it means you will be paying $100 for this call for 100 stocks. And at the same price, at the same time, let's assume for example purpose, the puts are also on $1. Okay. So now after some time you see the stock price goes to 12, and if you have bought the calls, the call price will eventually go to like $2, but the put price will go to 0.5 may say, because you were assuming that stock will go up and it is going up, so your calls which are related to stock going up, so that's why your price increases from 1 to 2. But if I bought the price and I thought the stock price will go from 10 to 8, so my put will go down. On the other hand, if the stock price goes from 8 to 10 to 8, now it would be reverse. Your calls will be selling at 0.5, but your puts will go to 2, because it get aligned what you assumed. Correct? Make sense? Do you understand that? Just respond on your chat. Good, good, good. So anyone has any question on this? I'll show you the screen, I'll show you the live demo, but just for understanding purpose.
Yes.
Good, good, good. That's good. Okay. So I'll go to the next step. I'm assuming everybody now know the difference between the stocks and the options. So
Sorry, I raised my hand. Ali Bhai, I think you did not see. I raised my hand before.
yeah, go.
Ali Bhai, if you can one time more, please.
Okay. So I'm taking example again. $10, the price of the stock is $10, and you are assuming by your analysis that the stock will go to 12. So technically, if you want to buy options, you should buy option for the calls, not the puts. So if you buy the options for the calls, and I bought option for the puts because I'm assuming that stock will go to 8, you are assuming stock will go to 12. So you bought the calls at $1. I bought the calls puts for $1. So stock will go to 12. So your calls will give you profit, and now your calls is of worth of $2 and you can sell at 2. On the other hand, I would be in the loss because my assumption was wrong. Price go in the reverse direction, so I will be losing money and my puts will be at 0 or maybe half. Okay, it may be 0 also, so you should not be surprised. On the other hand, if it goes to 8 rather than 10, then my assumption was right. So you will be losing money in the calls because you are thinking that the stock will go up. So stock didn't go up on, but I was assuming that stock will go down. So my assumption was right. So I will be making money on the puts. So this is different between the calls and puts. If you assume stock will go up, so you would be buying calls option. If you assume that stock will go down, then you will be actually buying puts option. The basis of Tariq is asking what is the basis of assuming. Your basis of assumption is your technical analysis, and there are many technical analysis tools, and everyone is using different, but wherever he is comfortable he can define, he can understand, and I will try to show you few. but just for the information purpose, and then you can learn it from YouTube, or I may be actually scheduling another session to discuss the technical details later on. But let's go through this one first. Okay, so I'm assuming that you understand this now. If not, then bear with me. When we will discuss on the screen, you will understand that. Okay, so now these are the options of the accounts you may, so we will be bound to give either call or put option. You, Salim is asking, we will be bound. No, you are not bound to. These are the trading options you have in your hand. If you want to use them, you can use it. If you don't, nobody can force you. You can either buy the stock, you can buy the call options, you can buy the put options. Everything is your choice. Okay, so let's talk about the account options. What you have. I use TD Bank. If you are using RBC or whatever bank or any stock brokers, there are some stock brokers in the market too. I think there is one Quest Trader and some others too. It's your call where you want to go, but these are some options which normally banks have. So I'll go through this one by one, so you should know what account options you would have. TFSA. TFSA is an account type which you have to talk to your bank that you want to open a TFSA account for stock trading. They can open a TFSA account without stock trading too, but you need to tell them that you want to trade stock. So they would open an account for you in the stock trading zone as a TFSA, so you can trade your stock directly. This is a tax-free account, and for this tax-free account uh, you have the options from the government, how much you can spend, how much you can put over there. Your contribution to the TFSA account is 5500 annual contribution limit for 2016 plus any unused contribution room from previous year. TFSA is only in your local country, so it would be Canadian. Okay, Iqbal, you are sure that you can have the USD TFSA also? Okay, I understand what Iqbal is suggesting. You would have the TFSA account. Yes, I understand. That is the point. So for all the accounts, when you open an account, you would be allowed to trade the stocks in Canadian or in the USD. So you would be able to trade the stocks in Toronto Exchange, Nasdaq, New York Exchange. So these are the major exchange where you can trade from your local banks here. But if you go with the stock broker like Quest Traders, they may have option to give you opportunity to trade in other countries also. But if you have the TFSA account in Canadian, nobody can stop you to do the trading in the USD. But what will happen? So you have the money in the Canadian stock, in the Canadian dollars, like $10,000, and you want to buy the stocks in the USA, and USA stock costs $10, 10 USD dollar per stock. So you will not be able to buy uh, 1000 stocks, because when you will buy, the bank will convert your currency into USD. So there would be a conversion rate applied, and on that case, you might be able to buy the stock for around, let's say, uh, 700 stocks, not 1000, and your whole money will be exhausted. So this is the TFSA account. So in the TFSA, you can check with your bank if you have not contributed in the previous year. So you can talk to your bank. These are just my recent information, but your bank would have latest information. So you can talk to your bank what available limit you have and how much you can contribute. If you have not contributed in the previous year, you can contribute all together now. So for, and this is what the annual contribution limit was, 5,000 up to from 2009 to 2012, then 5,500 from this, and onward is like 10,000. So you can talk to your bank and they will let you know how much contribution limit you have. So this is called TFSA. Whatever money you make in this account, whatever money you make in this account, a profit, it is tax exempted. So you will not be paying any tax on this amount. So whatever profit you get, you will not be actually asked for tax. At the same time, if you lose the money, if you lose the money, so it will also be your loss. The CRA will not account for your loss too. So what does it means? CRA, if you lose your amount in the stock trading, CRA will consider this as your capital loss. So if you lose money this year, next year when you will make money, you can still claim that from your capital loss. So it will be tax exempt until unless you finish uh, your losses. So if you make money, in simple words, there will be no tax in the TFSA. Second type of account is RESP. RESP is the Government of Canada's another saving account, registered education saving plan. So you will be contributing, I believe, 2000. I don't remember the limit, and Government of Canada give you 500 on top of that, and these are accumulated for your kids until they got to university and they are above 18 years. So this money they can actually take for their education. So every month, every year, when you actually contribute to RESP account, Government of Canada will also contribute to that one too. So you can check the administrations or what limit you have and how much government will be contributing. I think here is the same thing applies here too. If you have not contributed in RESP for last years, you will have the option to contribute that above and beyond your limits, annual limits you have. So you may need to talk to your bank what limit you have. And again, this account bank can create without stock trading option and with the stock trading option. So you have to tell them you want to open an RESP account where you can actually trade stocks. So they will open a stock trading. So next account option is RRSP. So we are not discussing the technicalities of these stocks. You need to actually check from the websites. You may need to check with your banks, but we will be actually discussing the stock options today. So my focus is not to discuss how much limit you have and how much you should contribute. That you can check. Yes. So RRSP account is you probably have the RRSP account, most of you guys, but couple of things I know that many people they never considered that. So RRSP is very beneficial if your one of your spouse is not working. So if you every year you have the RRSP limit uh, told to you by CRA. So CRA give you limit every year on the basis of whatever income you have earned. So whatever your limit is, if you actually contribute to RRSP, so this will be your savings and you can actually get benefit from the tax. So again, this is not my discussion for today, but one thing is important, you need to check what is the spousal RRSP. But for our today's point, you can actually get a stock trading RRSP account. So many of you guys, if you have the RRSP, I'm assuming that this is actually staying with the financial institutions, and they are actually doing some trading. They are investing your money in the bonds or in companies or in the industry. And my personal experience is I was not getting a profit from RRSP when it was with the institutions. So you can open an RRSP account for stock trading. Yes, RRSP, RESP, and TFSA. They don't have a option trading uh, option for you. So you can only buy the stock and sell the stock, not the options, not the call and puts. So you need to tell your bank that you want to open the RRSP, and once they have, so it will not be different. You will still be contributing, but it will be in your hand. You can buy the stock, you can sell the stock, you can make the profit, you can lose the profit. So this is the third type of stock account option. The fourth is USD or Canadian cash account, a cash trading account. Some people says direct trading. Direct trading. So you need to tell your bank you want to open the direct trading account. So what they will do, they will open an account for you, and generally all the banks and traders in Canada or USA, they open the accounts in both simultaneously. Even you don't tell them, they will open in Canadian and the USA. So in the Canadian account, you may keep money in Canadian. In the USA account, you may actually convert your money into the USD and you keep in the USD, and you can do trading on the New York Exchange, NASDAQ, and the Canadian you can do for Toronto Exchange. So you can keep a split of money in both account and both will be created for you. I don't know about the Fidelity account is a stockbroker. So they are not the bank, but they are a stockbroker, and you can open account with them too. And probably they have these three options together. It's my assumption. I haven't dealt with them, so you can check with them. My objective is to let you guys know that which kind of stock accounts you may have, and then you can check with your institutions, and if they allow you, they offer you, you can use them. So USD or Canadian cash direct trading accounts, so they will create your accounts for both Canadian and USD. But again, in this account, you will not have options to trade in option trading. I mean, you will not be able to do any call and put. It's again just buying and selling direct stocks. Next stock is account option is margin accounts. So in margin accounts, you will have the option to trade for calls and puts also, and definitely for stock trading as well. And definitely there would be again two accounts, one for Canadian and one for USD. And when you open the margin account, normally banks open another account for set of account for you, which is the margin short. And again, this will be USD and Canadian both. So let's assume you have these three categories open. So actually, you will see 6 accounts in your screen. USD Canadian, 2 accounts in the in Cash Direct, 2 accounts for margin, 2 accounts for margin short. And what is short? I'll discuss with you on the screen what is short. So I'll show you, but this is very, very risky. I will not suggest you guys to do anything with this one. It's very, very risky. And that's why sometimes banks also don't give you this short account, because they don't want you to lose your whole money at one shot. So if you don't have experience, probably they will not allow you to open the short account. Tariq is asking, is there any minimum limit for money? No, there is no minimum limit. It's your account. It's like your bank account. You can keep money as much as you want. Minimum or maximum is your call. Difference between margin short, and direct. Nishant, I'll repeat again. The difference between these two, the direct cash and margin. In the cash account, you can do only the stock trading. You can buy and sell the stocks. In the margin account, you can buy the options and you can sell the options, as well as you can also do the stock trading. When options, it's the same thing as I mentioned earlier, calls and puts. And for the margin short is a completely different beast, and I will tell you when I will show you on the screen. But the short means uh, uh, Nasir asked me if there is any requirement for the day trading. No, bank does not care what you are doing. Are you doing the day trading, investment, or the swing trading? These are the trading strategies. The bank has to do nothing with this. It's your call what you do. So accounts are accounts. Yes, you can use the account with $5,000. You can use the account with $1,000, $500. Nobody can stop you. So each broker or bank, they charge the fee for every trade. So if you make a trade for $5 for 10 stocks, or if you make a trade for 10,000 stocks, bank will charge you one time service fee. So TD Canada charge $9.99 for each trade. Either you sell or you buy the stock. I'm not sure what RBC is doing, so probably their range is around same, $6 to $10. This is okay. RBC is $7. So here you go. CIBC is 6.95. So TD is 9.99. So it whichever bank you choose, this is their trading fee. So I'm repeating, either you buy the stock or you sell the stock. They will charge you the fee for each transaction. Either you buy one stock or you buy 100,000 stocks in one shot. So they will charge you one fee only. So these are the account types, and this is the what banks would be asking. So there is a, let me open my own bank account screen to share with you. So for just for a second, I will actually stop sharing and will come back. I'm just opening my account. So I believe you guys can see my screen now. Good. So this is the TD Bank screen. If you so when you have this screen, you may actually find a list of accounts which you have. So here you see TFSA, RESP, cash accounts, which I told you, margin accounts, and short accounts. So let's talk about the cash trading account. So as I mentioned to you, so you will see this kind of a screen on the TD Bank, and you can check with the uh, anybody has any question? Okay. So if you have any question, so you can just actually unmute yourself and ask me the question and mute yourself again.
Sorry, I have a question.
Yeah.
Okay, so you mean this swing and the day trading and even the third is the investment. These are just the strategies. Like they are not any. I thought they are just a particular account.
No, no, no.
Any account.
No. There is a no account. Any account you can use. Is your strategy how you want to play. Okay.
Okay, all right.
Okay. So in the 3D, so you may see this kind of a screen. It shows you what you have, what is your holding, what activities, but there is a button which says uh, buy and sell. So if I click buy and sell, it take me to this window. So today market is closed, but let's see, I have to buy CNQ. So when I say CNQ, it give me both option, USA or Canadian. So I'm going a little slow, just you guys should know that. Where I'm in the Canadian cash account, but I still can buy the USA Canadian stock too. Nobody can stop me. But when I will buy, the bank will be converting my Canadian money into USA at whatever rate on that particular day is. So that is the reason either you go with your USA cash account or Canadian. It depends what kind of stock you want to buy. So let's say I want to buy CNQ Canadian account. So you see buy and sell buttons here. So if you have to buy, you will press buy. If you want to sell, you will press sell. So if I want to buy, here is the quantity. Let's say 100 stocks. Do you have any question, Nadeem? Okay. Okay, Nadeem, what is the question? You can unmute. Yeah. Go ahead, Nadeem. Okay. All stocks trading is $0 now in the US. JP Morgan changed to zero and everyone is zero. Nobody is zero. Market is closed. When market is closed, you can see the stock price are still there. So stock price is still there. You can pick whatever you want to buy. Okay. So per transaction cost is $9 for TD, as I mentioned. Okay. So I was reading the comments on the text. Okay, I'm coming to bid and ask too. Sorry. So what is bid and what is ask? Somebody has few stocks they want to sell. So let's see. Let's see. James own 100 stocks of CNQ and want to sell at at what is the price right now? Want to sell at $20. 20. Another guy, John, owns 100 stock of CNQ and want to sell at $19.8. Tariq want to buy 100 stocks at $19. Usman want to buy 100 stocks at 19.5. This is to understand. So what James is doing, James is putting asking price. This is called ask price. This is also called ask price. This is called bid. This is called bid. On your screen in the banking site, you see bidding number, bidding amount and asking amount. Which ask price you will see? Logically, you will see ask price 19.8. not 20, because the lowest who is asking should be shown that this is the price right now. The lowest price of the stock in the market is 19.8, and the bid will be shown as 19.5, because this is the highest price being offered. So this is called bid, this is the ask. So no transaction will happen because the lowest asking price is 19.8 and highest bidding price is 19.5. There is still $0.3 difference. And now assume another guy, Nishant, want to buy on market price. So suddenly he will buy at 19.8, not 19 or 19.5, because these were the bids. Somebody was asking that he want to buy on this price. These were the price somebody was asking to sell, and Nishant they jump in, and he said he will buy this at market price. So suddenly he will buy at 19.8. So this is the bids and ask price. And sometime you never know that he has 10 stocks, let's say, and he has 100 and he is asking 22, and rest of is still same, and Nishant jump in. He said I want to buy 100 stock at market price. What will happen? He will be buying 10 stocks, 10 at 19.8, and 90 stocks at 22, and 22 is not shown anywhere. But you see the lots here, the 5 and 1, this is what they have. So if you don't actually put the limits, you may end up buying at $22 because you don't see 22, it is hidden. You first see 19.8 and you see 19.5, but you don't see 22. But if he does not have that much stock, you will buy 19.8, 10 from him and 90 from 22, and it never show up on your screen before, and at the end you will be saying what happened to me. So that's why it is important, and that is the main reason why I'm actually doing this webinar today, that you should know which price are near to the bid or bid to ask. Those will be shown. Okay, how to put the limit, and this is exactly this is what my reason for today's webinar, how to put the limits. So if you see here, you see, if you click the price type, so this means we should always set a price at yes. Mr. Salim, do you have any question?
Yes, otherwise.
Yes, go ahead.
Okay, so you showed here that asking and bid price, but in my accounting with the RBC, we see two options: market price and limit price. So when we put limit, then further two options we can see on here on our account, that limit price or stop price. Can you explain what is limit price and stop price?
Yeah, I'm coming to that one too.
Thank you.
Okay. So when you actually when you click the price type, so you see this screen here. You have market, you have limit, you have stop market, you have stop limit, and you also have a trailing stop market, and you have trailing stop limit. These are very important for you guys to know. I I'm actually full on the screen, so I don't see your raised hand right now, because if I open that one, so my screen will be limited. Let me see if I keep that. So if you have a question, so let me see if I can minimize this one. Please explain all price. I'm going to do that. I'm going to do that. I'm going to explain each and every of these. Once I'm done with this, I'll ask you guys. I'll ask you guys. I'll give you option to have questions. So bear with me. I'm not actually. I don't have the participant list in front of a screen right now because I have to see the full screen. So bear with me. I can't see the chat. I will continue and I will give you option for the questions. So when someone, if I click to buy right now, it will go to the market price, which is the 19.7 for now, as I explained. And if there are more stocks which I have to buy, it will go to the next level after 19.75, which I can't see on the screen. So for best for me is I'll put the limits. So if I say limit, so if I say I'll buy at 19, so you see on my screen I said they want to Tariq want to buy at 19, Usman want to buy 19.5. How this happens? They put the limit. They also put the limit of for sale. So on screen you see limit. If I say I'll buy at 19, or if I say I buy at 19.8, so next time if the market is open, you will see 19.8 will be here. If I actually place this order, you will see 19.8 will be here because I am the highest bidder. So I'll put the limit here. So when I put the limit, so stock will not be bought until the limit hit, until someone from the asking price comes to 19. So if I want to buy at 19.75, I'll put 19.75. So stock I will buy at 19.75, not at 22, not at 21. So if 100 stock is not available, I'll buy 50. The bank will buy 50 for me, and they will search for 50 more. So whenever the another seller comes to 19.75, my bank will buy for remaining 50 also. So this limit save you to control. You should not be buying higher. And this you can put this limit. Okay, this is the day limit. So it means this limit is applicable until today. Once today market is closed, if you could not find the stock at this price, your transaction will be expired, and nobody tomorrow you will not see any transaction open for you. But if you want to keep this for next few days, so you see there are two options here. Specify. When you click specify, it gives you the option of the date. So you select the date. So it gives you the date option. So if you want to keep this limit, let's say till May, so until the 6th of May, my transaction will be open, and any time, even if you are not, if you haven't opened your stock account on front of your screen, doesn't matter. Bank will have this. So even you are doing nothing, your computer is off, you're sleeping, but if this limit hit, bank will buy stock for you. And same thing applies to sell as well. If you have 100 stocks and you bought at 18, you want to sell at 20, you put a limit of 20 and you select a date until when. So maximum 3 month banks allow you to do that. to put the limit up to 3 months ahead. So if I apply this, so any time from now till 8th of July, the $20 hit, the transaction will be made and the my stock bank will sell. Is it nice? Yes, you can do the from trading from your bank app, from your mobile application. So there is no difference. You can do from your mobile to your tabs. They have the TD. You have to download the TD app. They will give you the option. So whatever limits we have, we can apply for sell or buy both. Okay. Next is stop market. This is little different. So it says stop market 19. Let me see stop limit. When I say stop market and I'm saying 19. So what I'm saying buy 100 stocks for me at a stop market limit. Stop market limit means if market hit at $19, it means many guys are asking at 19. After that, buy at a market price. So you understand what I'm saying? I'm saying it will be same scenario. Let's assume market is slowing down and now the bidder are asking, let's say $17 and the stock is going down. The seller is saying, I'm explaining again. Seller is selling at $19. So rather than 19.75, seller is selling at $19. And you had already put a limit stop market at 19. So when the price will come to 19, after that you are asking your bank to buy the stock at market price. At market price when the stock price become 19. It's the same thing now. Yeah, it's the same thing. Like limit. No, limit is different. It's the same thing like market. So market price, whatever you're doing here at market price, you're saying not here. Do that same market price at $19. It's a exactly same thing as in the market, but you put a stop limit. You're saying not now when price goes to 19. Okay. So limit is different. Whatever the market goes up and down, you are saying buy stock at 19 or don't buy. Okay. A stop limit. Now you are saying, you see there is two options more now, trigger price and limit price. Trigger price is when you say, okay, when stock goes to 19, this is your trigger price, then you should buy at $18. So your transaction will be triggered if stock further go down to 19, but you are saying I will not be buying at 19. I'll be buying at 18.5. So when price will go to 18.5, your transaction will hit. It is close to the limit, but you are setting your benchmark first when your limit should hit. And then the trailing stop market. Stop limit is when you can wait till stock goes further down, and then you are sure that it is going further down. This is I'm not using this any much. I use normally the limit and stop market because it's a kind of same thing, but you are actually lowering your bracket. On the other hand, these two are very important: the trailing stop and trailing limit price. Trailing stop market, what does this does? You are saying whatever the market price is 19.75. You are saying that if price difference is zero point 0.5 from this point, then buy it. You see, when I put the 0.5, it shows me 20.25. It means you are assuming that stock will be actually ramping up and you are eager to buy, but you just want to take a chance. This is, I'm going slow. You need to understand this. Okay? You need to understand this very carefully. When I say 0.5, so what will happen? I'll show you here to explain that one. This is current price of the same stock. This is the current price. You set a limit 0.5, 0.5 trailing. So 0.5. So let's say stock goes up to 20. Stock going up to 20, or maybe going up to 25, up to 20. So if from 19.75 stock keep going up to the 0.5 more, which is the 20.7, 20.25, this is the limit. If stock continue grows up from here and it doesn't come down, then this would be your limit. So the stock will be bought for you. You will buy the stock at 20.25. But if stock goes down, further down, let's say it's going down to 18. Okay, it goes further down to 18. Now your bench is set at 18, and now because it's going down, once it's stop at 18 and it start going up again, so from here when it goes to 0.5 up, which is 18.5, you will be able to buy the stock. So from wherever it stays at the bottom and start ramping at 0.5, you will be able to buy the stock. Either it goes up directly from here or it goes down and then goes up. So wherever at the bottom it hit, from there you will add 0.5 and you will be able to buy at 18.5. Is it clear? Okay, good, good. Not clear, Iqbal. Okay, repeat. Okay, how do we set? Okay,
Sorry, I have a question.
yeah.
Okay, so how does it get triggered? What do you mean by the lowest, and how does that lowest get decided and the highest get decided?
Okay,
How?
okay, okay. I can explain you. Okay, current price is 19.75, and you said if it makes a difference of 0.5 in positive side, then you will buy it. Okay, so if it makes a difference of 0.5 from right now from here upward, it start going up, you get your trigger start. So this will be hold for you, and once it goes 0.5 up, you will be able to buy it. If it goes further down, you are still not triggered because it's going down. When it stays at 18 and start going up again, this will be your benchmark then. So it hold this bench and trigger your price, and once it hit 0.5, you will be able to buy. Even if from 18.2, let's say it goes to 18.4 and it start going down again and it goes to 17, it goes to further 17, so your price will not, your transaction will not happen. So now your new trigger price would be 17, and when it start going up, you will be able to buy at 17.5. So whenever it stops and goes up to $0.5 up, that would be your trigger. That would be your range. If it goes up to zero point 0.3 and goes further down, you are still safe. It's giving you benefit. So when it goes further down, so your benchmark goes down, and wherever it hits in bottom and goes up 0.5, it should continuously do up run till 0.5, so it will hit your trigger and your transition will happen.
Can we do the same thing for the selling as well? I guess, right?
Yeah, I'm coming to that one. So how long it has to stay at 18 to become? No limit. It can stay 18 for whole day, and you may not be able to hit your transaction by end of the day. If it is a day trading and it does not hit this difference of 0.5 for the whole day, you may not be able to get this transaction done. So there is no time limit. But these stop limits, trailing limits, are normally not done for the next days. These trailing will be done only for the day trading, only for the day. So if you can hit on the day, that's okay. Otherwise, tomorrow morning, you wake up in the morning, you set the limit again at the current price and do the same thing. What do you mean by Iqbal? Why someone buy like this? Because he want to make sure that he's assuming, for example, I'm assuming that the CNQ stock will go further down before it comes up, but I have a 50-50 chance that it may go up directly from here. So I put this limit, and if it hit below, I'll get the benefit. If not, somebody unmuted himself, please. Okay, Nishant, you have something to say?
Unmute. Sorry.
Okay. So, so this is, I'm just actually taking a risk I may be able to buy at 19.75 right now, but if it is go further down to 18, then I may actually lose 1.57 1.75 difference. But at the same time, let's assume you get you have to buy at 19.75. You have the option to buy at 19.75. Oh, I know CNQ will go up, I should buy it now. You buy at 19.75, but for 2 hours it goes to 18 and then goes to 20. So what you missed? You missed the opportunity to buy at 18 rather than you bought at 19.75. So the difference of $1, you lost it. So I am trying to buy at the best possible price. If it does not go down, then it's okay. I may be losing $0.5 opportunity and it go further up. So this is called trailing stop limit. And you can apply the same thing for selling. For selling, when I say 0.5, so it's on other side. So in the buying, when stock will go up 0.5 at once, I will be able to buy. In the selling side, when stock will go down, see here, now you don't see the 20.25, you see the 19.25. It's the same philosophy, but it is a benchmark is not set for your floor but for your ceiling. So if your stock goes down from 19.75, you are ready to lose money up to $0.5. So you are saying if a stock goes further down, I don't want to lose too much money. This is my stop limit. This is your stop losses. So I set a limit, okay, 0.2, let's say. If it is go further down by 0.2, I'll sell the stock. So your stock will be sold when it goes 19.55. Why you are doing this? If stock goes to $17 and you bought 1,000 stocks, so you lost almost 2,000 or $2,500 at once. But I want to control my limit. I say, okay, if stock goes 20 cents down, I'll just accept the loss, I'll sell it. So I bought at 19.75, but I would be able to sell at 19.55. I will accept the losses. But the positive thing in this, if a stock goes to 25, 20.5, and then goes down, so your ceiling is not set to 19.75, then your ceiling is set at 20.5. So from 20.5, when it goes down, so your stock will be sold at 20.3. So you would still be in profit. So you bought the stock at 19.75 and you set the stop trailing limit for sell at 0.2, and when stock goes up and then down, so you would be able to make little bit money. What if just keep stocks and don't sell? Then you don't need to sell it. If you don't want to sell, don't sell it. Don't put any limit. Just if I do like this, so if I have to sell the stock in the same day, I wake up in the morning, I set this kind of a stop trailing limit, and the stocks are sold. But if I don't want to do every day, I'll do the limit. I'll say, okay, if I bought the stock at 19.75, let's sell it at $25 whenever it happens. I took the 3 month or 2 month gap here. I say, okay, up to June 26, whenever stock goes to 25, just sell it. So even I'm sleeping, once the stock hit, I got the deal. And that happened to me. Even before I wake up in the morning, when I open my account, I see my stocks has been sold at a higher price, and that higher price never come in the whole day. So when you set the limit, that give you benefit. So this was the market limit, stop limit, trailing stop, and trailing stop limit too.
Question.
Yeah.
So, is can let's say before buying it, can we do limit of buying and selling together? Can that be done? Because or else we have to buy first.
Good question. I'm coming to that one. It's very good question and very valid. So let me finish this one, then I'll come to that part.
Okay, sorry, yeah, but there is another question before that.
Yeah.
If you can, yeah. So let's say there is a you said this is good for the day trading only. So let's say there is a price of uh, price which was $10 that started to going up to $11, and then it started to going down to 11.5, and then again started to going up to 12. So now that the limit which we set that already
Yes.
hit, so now we cannot get the benefit out of it, right?
Yes. That these are all the pros and cons of the limits. So you might be able to sell, and this also happens to me. I put the limit, I stop trading limit, my stocks are sold, and after the selling, my stock goes up. So sometimes I lose the money on that too. So that happens.
Okay, thank you.
So we have to set the limit anyways. It's not necessary. You can buy at the market price, but I prefer to set the limit even if you are buying whatever price. Even if I'm buying at 19.7, I'll say the 19.7. So uh, it should not hit from the back end, which I don't know how many stocks are. So it is important for me. Okay. So after this, there is a stop limit. The market trailing limit is wherever the market is going, if market goes up from certain limit, zero point 0.5, my trade will hit either buy or sell. So there is a stop limit too. It's the same thing as a market, but I'm saying that it should hit 20, no, 19, let's say 19, and the difference is 0.2. Okay. In this trailing stop limit, it is little complex, but how it works. Trigger delta means you are saying that when price difference, which we discussed previously, is 0.5, then your transaction is triggered, and when you are saying once it goes to 0.5 and after 0.5, if it varies between 0.1, I'll buy. So you are putting a limit on the limit. You're saying the bracket is 0.5. Once it hits the limit of 0.5, from that, if the difference is get 0.1, I'll buy it. So what the benefit of this is uh, stock goes to like 20.2, as we did in the example. If stock goes to 20.25, so you hit the 0.5 already. So from this one, you are actually limiting your next move. So after this, you are not still buying, but you are saying from this 20.25, if the variation becomes 0.1, which is the 0.3, if it go further to 20.3, I'll buy. And if it goes to 19.20.1, so your whole limit will go further down and it makes a difference. It's the same thing but little complex. So I won't suggest you guys to use it until unless you have some practices. But these are two limit and stop market limit and stop trading market limit. These are good to use for selling and buying to control your losses, especially when you buy the stock. Then I would suggest always to put a limit stop loss. So you can always put the stop limit market that at this price it should be sell, or the trailing stop limit. You can use that one to save yourself. So these are the limits. Do you have any question on the limits? I will come to the next level then. If you have the question, just unmute yourself, ask me. Okay. If they yes, I'm coming to that question, Nishan. So now you see these are the stocks. Now we have the options. Nishant, I will respond to your question. This is sorry, I stopped sharing and I have to log in again. There was a break. Bear with me. I'm sharing again. So on the option side, so you see when I click the options, it says this account is not eligible to do the option trading. As I mentioned you earlier in my presentation, that you cannot do stock option trading on the direct cash trading account. You have to do the margin. You have to buy the margin account for that. So I have the margin accounts, which I won't be able to show because of my privacy, but I can tell you how to do the options. Once you have that account, you can trade the options. So let's say again CNQ. So if I go to option trading here, so you won't see any options account. Let me see if I can. I'm just stopping my. No, let me do, because market is closed, so you would not be able to see what option prices are. Otherwise, you see the option. You see the stock pricing here. You see the stock pricing here. CNQ, Canadian. You see the stock pricing here. In the same manner, you will see the option pricing in this window when market is open. So market is closed, so you may not be able to see what option price you have right now, but this option will come here. So in the option price, you have to select what is your expiry date. As I mentioned to you, you have to select expiry because your option is a contract and the contract will expire on some day. So there is lot of strategies for options which we are not discussing today, but I'm just telling you how the option trading is being done. So you can pick a date. Okay, let's say 15th May is the expiration. On the 15th May, You say, what is the strike price? Strike price 19.75. So you are saying, let's say $20. $20 is your strike price. You're buying the option for assuming the stock price is at 19. So then there is a call and put. You select the calls. Oh, here you go. Okay. Somebody has some question. Okay. Yeah, I'm showing the screenshots screen now for the option. So you have the option now. When I click, okay, 15th of May is my expiry date for the contract. $20 is the stock price which I may buy, and call is the option which I'm picking, call or put. I'm assuming the stock will go up. You see, the option price is $1 is a bid and $1.1 is asking. So I have to choose one of them, or I can go on the market or limit again as we used to do. So this $1 is for one stock. So when I select the option action, so why it's not being selected? So market is closed, that's why I'm not able to select any action. Otherwise you have the action to open to buy and sell to close. When I say 100, so there is no action right now because market is closed, so I may not be able to show you a screenshot for options in this way. But if I say 10 does not mean the 10 stocks. It says 10 multiplied by 100. It means 1000 stocks. 10 is the contracts. 10 contracts. The price which I see here is not per contract. Be clear on that. I'm not talking about per stock, per contract. This price is not per contract. This price is per contract. $1 is per stock. So if you have 10 contracts, it means you're talking about 1000 stocks. So 1000 stocks of $1 means you're talking about $1000. So this is the way you select the options. If I go to puts, that may have a different price. That may have a different price. So the put price is this. When I see higher price, it means there is more possibility that stock may go further down. So that's how you do the options. I'm not able to share the screen because market is closed. But if you have any question when market opens, then let me know. No, I'm talking about the strategies. Do you have any question on the option? Because I'm not able to show the screen. But I will see before I close today. I'll see if I have the options screen. Yes, Iqbal. Oh, Iqbal just joined. Is somebody talking? Okay. So now the strategy. So Nishant, you asked me this. So you have 4 type of strategies. I will ignore this multi-leg which is option related, but let's talk about these 3. So if you select the strategy, one trigger another one. So when you say if this happens, the one strategy and the second call will also be done. So let's say I want to buy the CNQ stock, 100 stocks. I put the limit of 19. I put the limit of 19.75. and I can set the date, and I can do for day trading. It's up to me. I say, okay, this is the time frame when I should buy. So if I buy this, on the next side, when I click the second, I want to sell it also. So I said, if I buy it, the same stock, if I buy it, please sell the 100 again at the price of 22. So these two are set. Once one hit, other will hit. If first does not complete it, the other will also be expired. Is it a good? I like this strategy, so you
Yeah,
control
it's
both.
good. It's good, but it can be on the option, direct trading as well, or just in a margin account only.
Okay, Nishan, and for everyone, the margin account is for option trading and the stock trading. The direct is just for stock trading. Strategies are for everything. Strategies are not dependent. If you don't have the stock, your strategy will not work. You will not be able to buy or sell. Okay, so your account will not allow you. For example, if I go with the strategy of the multi-leg, you see, immediately it shows that this account is not eligible. But you see the strategies here. So the strategies are there for you, but it all depends on the stock type. So what we discuss on the margin and direct is the stock type. The strategies are applicable for all if your account allows you. So this one strategy is, if one transaction is done, then other will trigger. Other will trigger at the whatever the limit you set. That's how you can set one trigger another, OTA. There is another one, and this is strategy. You see there is or. You say, I'll buy the CNQ 100 stocks at 19 points. Hold on please. समीना मोबाइल पे लगा लेना प्लीज. समीना बंद कर दे. मैं काम Sorry guys, I was on mute. So we are talking about the strategy. So this strategy is either do one of them, not two. So it means you buy this stock, or you are saying if not, if it doesn't hit, you say, okay, Suncor, I want to buy Suncor also. So either buy Suncor when it hits uh, let's say 21. So whichever hits first, that transition will be done and other will be expired. You got it? I say,
Ali bhai, I have a quick question on this. What you're saying is if one of them doesn't happen, the other one will automatically trigger it, right? So if you don't buy the stock, I'm talking about one trigger another, okay?
one trigger
Another,
yes.
that option. Okay, got it. So you're showing a different one.
Yeah, okay, go ahead. Ask the question. Yeah.
The question was this option, just unless you buy it, you cannot sell it, right? That's the one
Yes.
trick another option. Okay, got it.
Yes.
Okay.
Yes. Until you buy. And the second strategy is
Okay, one
you do
cancel.
one of them. So
Okay.
if any one of this triggered, the other will be cancelled.
In this second strategy, for example, your buy doesn't happen, but the sell did happen. So are you shorting that?
No. Sorry. You are misunderstanding. So,
Okay, got
though you mute yourself. I am explaining.
okay.
So, if you are saying that you have to buy this stock at 19, and what you are saying that in this case, bank will not allow you if you are selling 100 stocks on this one, bank will not allow you this transaction will not pass because you don't have these stocks. Okay, you don't have these stocks. This only will apply when this is legitimate. So you are buying another stock, you are saying this one or that one, whichever hit your limit, you will buy it. So if one hit, other will be cancelled automatically. Correct? Make sense? Okay, good. The third strategy is, I love this one too. I use these strategies a lot to save myself. So for example, I want to buy CNQ 100 stocks and limit is 19. And once I buy that stock, then I want to sell CNQ. I want to sell CNQ 100 at limit of 25, or 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 I will buy CNQ more 100 more if it hits the limit of 18. So what will happen in this strategy? If your first is hit, then it will go to one of these two. Then it's option. So from one of these. So if you bought 100 stocks at 19, you're triggered. Now you have two strategies. One of them will happen. Either you would be able to sell at 25, it goes further up, or you will be able to buy 100 more if it goes further down. So whichever hit from these two will cancel the other one automatically. So here you have three trigger options. One is the first one, which you buy or sell, and the second round is for two options. So one of them will hit. Make sense? Any question on this one? If you have question, you can unmute and ask me.
Sorry. So this third strategy will either sell it or buy it more. That's what you mean, right?
Yeah, third strategy is buy more if it is go further down. So I would like to make more profit. So I'll make more money in future.
Right.
So one of them will hit. If stock goes up, then they will sell my stock at right price, and if stock goes down, then it will buy more stock for me. So these are the strategies which you should be able to use, and if you don't have the margin account, then you may not be able to use the option trading. So these are the strategies which I wanted to discuss with you today. Do you have any question on the strategies? Please let me know.
Yes, sir. Yes, otherwise I do have a question.
Yeah. What is the question?
So like I'm with RBC. When I go on my options, so I see stock and E ETFs, options, mutual funds, and fixed income. I did not see any strategies here. Look, like if I have to put these strategies, what you just discussed, where I will be doing that?
I'm not sure about RBC, but mm, tomorrow sometime you can share your screen with me and I can help you out. But you can call to your bank also. They can guide you where you can find these strategies. But you should be able to find these strategies in your bank also. So can you
Okay,
mute yourself after your question, please?
okay.
Thank you. So every bank has these strategies. Yes, Maz. Maz, you have any question? Okay. So every bank has these strategies for them, but if you don't see on your screen, you can always talk to them. I don't believe that some banks would not offer these strategies because this is the trading fundamentals. So they should have it. So I'm not sure that if some bank does not have these strategies. So please check with your bank. Uh, I believe they should have that.
I have one more question.
Yeah.
Let's say in case,
Can all other guys mute? Maz, you can mute.
let's say in case, if I don't know whether you have the strategy or what can I do to mitigate my risk. Let's say in case if there is a stock for the $10 price, and I if the price goes for the $12, I want to sell it. But instead of the price goes instead of the $10, it goes to the um, $8. I want to sell that as well because I don't want to lose so much. So is there any strategy to or the way to work on it, or
No, that's I told you the limit is the trailing limit. So you can always set the stop trailing limit. For example, as you mentioned that $10. So you say okay, when the delta become $1, just sell the stock.
yeah, okay, got it.
So this
So
is the
stop
limit.
stop
Yes.
trailing limit we can use as a particular limit. Let's say $8 is the stop limit, so we can stop it. So that's what it means,
Yeah,
right?
for that one, you can use the trailing stop limit. You say, okay, when it hits $2 down, then sell it at $0.1 difference after that. So you can set from here, or you can do the stop trailing limit. This is the best one, which I would suggest. You can say, okay, if your stock is at $10 and you're ready to accept $2 loss, you can say, okay, if stock goes $2 down, for example, if I take the same example, 100 stocks, and if I use the trailing stop limit 100, I say okay, $2. So I would be able to sell my stock at when I sell, I say 2, it should say 19 somewhere. Okay, so you can use this one. So right now it's
In the strategy, I think you can do that.
no, not in the strategy. The limits you should apply here. A strategy is how. Uh,
No, I'm talking. Sorry to interrupt you, but I'm talking about in the strategy. I wanna
yes, you
use
can do
the
that. Yes, you can do that. Yes, yes. You have the, for example, if you in the second limit you want to sell at some point, you still have the same thing here too.
trailing stop limit. So what should I use? Trailing stop limit, right?
Yeah, trailing stop limit is the best. So if its market goes down, it automatically sell the stock at a certain difference of the price.
Okay, thank you.
So these are the strategies. These are the limits which I wanted to share with you guys. And now, one thing which I wanted to somebody has can you guys mute please? Somebody has unmuted. So there is a short selling which I don't want to discuss, but let's see for the short selling. Short selling means C and Q. I'm assuming don't do that please. I'm letting you guys know, but don't do that. It can actually eat your whole money because this is a loan. You're not spending any money. You will not have any money in the margin short. So what you do, you say, okay, I want to short sale. You're selling first. You're not buying first. It is reverse of your trading. Normally in the trading, you buy the stock, you sell the stock, correct? In the short selling, you sell the stock first and you buy the stock at the lower cost. You are assuming that stock you are assuming that stock will go down. So you are saying I'll buy the stock at $20. I'll sell the short at $20. If stock goes to 20, then a number of stocks, let's say 100 stocks, you are setting a limit. You set a limit. You say, okay, $20. At $20, bank will sell the stocks. In fact, you are selling, let's assume you are selling the stock to the bank. So in the short selling, you normally selling the stock to bank. So you are selling the stock to the bank at $20. Once you sell the stock, it will show a negative amount in your account. So bank actually loaned you. You haven't spent any money. And once you sold it and the stock goes to down to 18, from 20 to 18, then you are buying it to cover. You are buying at 18. So the difference of $2 is your profit from nowhere. But the risk here, you sell the stock at 20 and the stock goes to 40. So bank actually gave you a loan of $20, 100 stock, bank give you loan of $2,000, and now you are buying, your stock goes to 40, so which is $20 more. So you would be paying bank a $4,000, 20 which was the loan and 20 which becomes a loss to you. So you will be giving bank a $4,000. So this is a small amount. So if you buy some stock at a penny stock, let's say some penny stock which is just $1, you sell, okay, it will go down at zero point 0.5, but that $1 will go to $40. So you would be losing whole money. You will be actually um, paying back loan to bank at interest. So that is very risky. So I will not go in detail. I don't want you guys to learn this too much, but you should have a basic information that what is the short selling. This can actually kill you. This can actually eat your whole property as well. So don't do that. Even bank will not open for you the short margin account. But rest of the stuff I shared with you, those were the strategies which I wanted to discuss with you. If you have any question, please let me know. Yeah, Nadeem, you have a question, please unmute yourself. Nishant, do you have any question?
Brother Ali, I have a
Good,
question.
Okay, one by one. So Nadeem, who is this? Nasir.
Yes.
Nasir, do you have any? What question you have?
Yeah. The between the limit selling or trailing limit, what's the major difference?
Between the
The limit, because you're saying if it goes, let's say, a certain amount, $2 less, from 19 to if it goes in 18, if it goes low or up, you want to sell it. Versus trailing limit, you're putting a double kind of check on it, right? After it
Yes.
goes to down and then it fluctuates by this much.
Yes. So sometime what happens if you put a limit of, let's say you are saying that sell at difference of zero point 0.5. So it will set a difference from zero point 0.5 from the price right now. So if it goes to 19.25, your stock will be sold. But you understand that the zero point 0.5 fluctuation is normal. So if it goes to 19.25, it will go to 20.25 as well. So you don't want to do that one, but you say, okay, if it goes to 19.25 straight, then if it goes further zero point 0.2 down from that, I would sell. It means you are assuming that then stock will go down, not come upward. So that will actually control your limit. Otherwise, if a stock goes to 19.25, your stocks are sold and lost. But after 15 minutes, stock goes to 20.5, then you will be saying, oh, I lost the money. Or definitely you lost the money. But if you set the other limit also, that can make sure that okay, your stocks are not sold at 19.25, but it goes further $0.2 down, then it will be sold. If it goes up from 19.25 to 20.5, you are still safe. You will still get the money. That is the difference. Make sense?
So basically, what it is doing is you are giving yourself a margin, a window, so it can
Yes.
fluctuate between this much. But if it goes out of this, then trigger, right?
Exactly. So you are giving a opportunity window for yourself. If it is goes further down, then you are still thinking that it will come up, so you don't want to sell at a loss. So you put another trigger after that. So you are right. So it is an opportunity window for you after that.
But but eventually you can achieve the same thing directly putting a limit, right?
No,
That if it
no.
goes beyond,
Yes,
you cannot.
but in that case, you are selling. If I say sell at 19 point, uh, you are saying what I'm understanding that if I don't put the trailing loss zero point 0.5, I say rather than doing that, I say okay, sell at zero point 0.5. Okay, that is your question.
The actual amount I was not paying too much attention. The deltas which I was paying attention. For example, it is $19 is the stock it is at, right?
Yeah,
And you one way if you're putting direct limit to it, saying if it goes below 18,
yeah.
just sell it because I don't want to have any more losses, right? Versus with the trailing limit, you say if it goes also
Okay,
to
okay.
18.
Just hold on. I got your question. So when you put the limit, and if I say okay, sell at 18, you know what will happen? Your stock will be sold immediately at 18. It will not wait for stock to come down. Your stock will be sold because right now,
Yeah, yes, it's a bad example from that perspective. I guess, let's put it the other way around, right? 19, it goes to 20. That's your limit for selling.
yeah. So okay.
Right?
If you bought the stock at 19.5 and your stock goes to 20.5, and then you put a limit of 20, that makes sense. If you are already above and then you put a lower limit, so for example you bought the stock at 19 and you said now stocks are trading after 1 hour 22, you said okay, I'll sell at 21, so your stock will still be sold at 21 immediately.
So, okay, upward limit. If I said I bought it at 19, if it goes 20, sell it. That's a straight limit, right?
Yes,
Versus
exactly. Yeah.
versus the trailing limit. The trailing limit goes on the positive side also or not?
Of the both side.
So, okay, on the trailing limit, I put also same thing, 20. If it goes $1 up,
Yeah.
right? then sell it. Then what would be the difference between limit and trailing limit?
Okay.
I'm just trying to sell it
No, I
both
can,
at $1
I
on the
can, I
positive
can,
side.
I think I can discuss with you offline if you other guys have understand that. But if you are selling, a stop limit is when it's a difference of window. Wherever you are standing, it take the difference of window up or down. So wherever the window actually hit, your stock will be sold. But in the limit case, there is no window. If you sell the limit, if you put the limit of 20 when you bought at 19, so it will be sold at 20 even if stock goes to 25. You will be getting 20. But in the trailing limit, if it goes to 25, your stock will be sold for 24.5 because you have a window of zero point 0.5. So you will be more beneficial when in the trailing. So it all depends on your analysis, what you see the accounts will be going in which direction.
Okay, thank you.
Okay. So that is the strategies, and I discussed the strategies, I discussed the limits. So I think that was the objective for today. Uh,
I have a
techniques we can
question,
discuss.
Heather.
Yes, go ahead. Go ahead, Salim.
Hello,
Yes,
can you
Salim, go
hear
ahead.
me?
Yes, we can hear you. Please go
Yeah.
ahead.
So my question is that, like in both sessions, especially today's session, we talked about features of the account, that how to trade in the market, like
Yes,
options, strategies,
yes,
stock, whatever. So the
yes.
basic thing we need to learn, uh, and I'm not sure that what is your plan to conduct another workshop or something like that. That how we like last time in last session you told a little bit about stock screening. So my major concern is that first thing we need to learn is how to analyze that what stock we are going to buy, and what these are another thing, that what time we are going to sell it. So first
Yeah.
thing I need to ask you that we need to get basic knowledge as a beginner, that how can we like analyze to buy some stock when it is good time to buy a stock.
Yeah, this is the key. If everybody knows when the good time is and when the good time to buy, when the good time to sell, everybody would be millionaire. This is the key. So you have to find the stocks. You have to see which stock you should be investing. You have to monitor them. I shared with you these screen. So I'm just closing my account. I think I have covered those stuffs already. So this is the investing.com. So
Yes.
investing.com is I use this a lot because it has a lot of potential. So it has an option of portfolio. You can create your own portfolio, whichever stocks you hear from market, you hear from friends, you can always actually put it here. You can create the tabs here. There is a plus sign, you can create the tabs. In the tabs you can add the stocks. So these are the stocks, some of the stocks which I'm just checking, monitoring. So metal stocks. So you can create the tabs, you can have the stocks here, you can see if this is actually going up, going down. And if I click any one stock, so it's open another window. If I click here, technical start, and if I click further, I'm waiting to come up the screen. It's a bit slow. So I normally recommend that when you enlarge the window, you see this kind of chart. It shows you the candle bars. So there are a lot of things which the technical analysis you need to check. So one thing which I can tell you, there is always a stop limit, there is always a resistance and support for any stock. So in the investing, .com, you can actually learn from YouTube. There are a lot of tools. You can learn each of these tools from YouTube. You can filter out, and this will give you some indication. For example, if I give you one, I'm not going to discuss a lot of details right now, but you need to spend time. You have to learn. So if I, this is Fibonacci price limit range. If I click here and I say price goes from here to here, okay, or I would say in the price in the past it goes to there. In the setting I go extended lines. So these are the major supports of this. So if you see here in this 2.3 range, whatever the stock this is I'm looking at, in 2.3 was the major support. So stock hit that one, comes down, hit that one, comes down, comes down, comes down, and suddenly hit and goes up. Now you have the resistance when it's trying to hit and trying to go up is called resistance. When it goes up, it becomes your support. Same thing become your support. So these are the major support and resistance ranges. So this stock goes up of this limit also. It looks like this stock will go further up now because it has crossed the limit. So this is one way of analysis. Another way is 5 point level. So you say, okay, stock goes further down, it should have 5 run. This technology says it's a 5 run down. So once it is done the 5 run, then probably it should go up. On same way in the negative side too. So if it goes 5 run up, then there are more chances to go down. So there are many other tools. So what I would suggest you guys is spend time, pick the tool name from here, and check from the YouTube. There are, you would find some training material videos there. You can explore that one. I'll see if I have to schedule another technical webinar for to discuss some of the tools. But today's topic was to explore what uh, account options you have, how you should trade. Even if I tell you what stock you have to buy, you should know how to apply the limits, how to use the limits, how to use the strategies. Okay, I think we are good with this one. So if you have any question regarding the main objective for today's the MASD, also one tool. There is one more tool which is very widely used. I think it is RSI. It's a resistance relative strength index. This is called relative strength index. Or that tools you can find from here. Indicators. In you see the list of the indicators. You may find MAC here, MACD. You would find the relative strength index, which is widely used. You see, when you see this comes down. So this simple RSI, if you use this for your trading, if a stock goes up, okay, I'll do that. So if a stock goes up from this 70%, it means the stock is overbought. When a stock is overbought, there are higher chances that a stock will come down. Because people who bought the stock, they will sell it. And there is a 30% limit. You can set your own limit like 40 or 20, whatever, but general standard default is 30. So 30% or below, if your stock is trading 30% or below, it means the stock is oversold. When it is oversold, it means people will start buying it. So you see here, if I stay here, this is oversold. that was down. Then after this, it goes up. It was overbought here in this range, and it goes down further a little bit. Then it was almost oversold, overbought. It further down. So this is one indicator. There are
Sorry,
many, but you have to
sorry, what
learn.
is it? What is this strategy called?
This is not a strategy. This is the
Sorry,
indicator. So
sorry, which indicator?
it is called RSI. It's a
RSI.
relative strength index. So there are many more. We pick the name, search from the Google or YouTube. You will find some learning about that. So I will see if I have to uh, if I have to conduct any technical seminar. Yes, Arush, you have any question? I think I pronounced the right name.
Yes, Ali bhai, this is Ravi.
Okay,
I'm
Ravi.
using Sushi's laptop.
Okay.
Ali bhai, it was very, very informative session. This is the first time I'm attending yours. I would love to attend your future ones. My request to you is, since the market is really hot right now, and on your recommendation, I quickly opened the account and all also. And I've heard from a lot of people that when the people dream of recession, I was watching on CNBC news that when it is time to recession, people make a lot of money. And now, unfortunately, I would say it is recession, but it's fortunate for some who can make money also, right? Because
Yes.
my $50,000 was lying in one account, which has not given me even 2-3% till now. I gave it to a planner called Shah Planning Company, and now with your experience, I am very motivated. At least I can, make something out of it, because many people told me, Ravi, if you had given it to me, I would have at least given you 40 to 60% in the last 5 years. What did you do of your RRSP 50,000 investment? So because we have never given any thoughts to, that we could also do investing ourselves, because we were so busy in our lives. So I would request you to hold some sessions as quickly as possible, so that we can immensely get help from your knowledge and your expertise, which I feel that we should have got in contact with you much earlier. Thank you very much.
No, thank you very much. I will try to do these technical seminars. We'll have to see, because I'm planning to do a lot of other seminars, technical seminars. I'm planning to do some motivational seminars also. So you guys will be in my distribution list automatically, but you will have an option to unsubscribe. I don't want to bother you guys too much. So if you don't want to receive my emails, you will have the option to unsubscribe. So you can do unsubscribe, or you can tell me right away in the email that don't include you in the distribution list. But whatever the seminar or webinar I will be doing, I'll be including you in the distribution list for sure.
Uh, yeah, sure. Thank you very much. And if you can just send us this recording link, so we can, listen to it when we, we want to, take help of it. Because
Yes.
it was a bit technical for me, and I will have to, go through it one or two times more, just to make sure that I can be more,
Yes, I
not to
understand
do
that.
any.
Yeah. So thank you very much. Anyone has any other question before we adjourn today?
Otherwise,
Yes,
just
Ali
close
bhai,
one
I have a
person.
question.
Yes, question please.
So my question is, I know you didn't discuss this, but these are normal non-taxable accounts, except the TFSA. All the accounts are taxable accounts. So, do you know anything about the tax structure on the gains that are made if we buy a stock and we sell it at a profit?
Hold on, let me answer the first question and then somebody can jump in. Yes, taxable. Uh, you have to talk to your accountant. They will be able to help you more. But generally, I'm telling you, I will not go into detail other than the TFSA. Whatever money you make, even in the RRSP also and RESP also, because RESP is the education education saving account, which is for your kids. RRSP account is your RRSP, whatever you earn. If you don't take it out, you don't need to give any tax until unless you take it out. Rest of the accounts, whatever money you make, 50% of your income from that will be taxable. 50% of the income is your taxable. So you need to talk to your accountant. They will advise you more on that. And next question,
Thank you.
please.
So, Heather, I have a question. While working on these accounts and bank accounts and trading thing, so when we are talking about stocks, it's just a single stock which we are talking about. On the other hand, when we are talking about options, then we are talking about 100 stocks or the contract. Is that right?
Uh, in the stocks, you're talking about the stock, maybe 1,000 stocks. The people buy 5,000 stocks, 10,000 stock at once, and but those might be cheaper one, or you have lot of money to spend. But in the options, you are talking about 10 time more at least, 100 time more, because one option contract contains 100 stocks. So you're talking about more, but it is cheaper because you have a limit for that. You have to execute your option within certain date.
Okay, thank you. So last thing to ask, can you recommend some stronger companies or organizations of which we can buy the stocks and like stay safe instead of jumping here and there in every company?
I would suggest, uh, I'm not doing the marketing here for my services, but I I have my clients which who pay me a monthly fee, and I recommend them what stock they have to buy at what prices and when they have to sell, because I do I do spend at least 3 to 4 hours every day to do the analysis before I actually recommend. But definitely for sure, I will suggest some account for long term, uh, which you can buy and just actually stay over there, just sleep for few months actually. So if you have some money which you can actually park aside for few months, like 6 months. So any energy stock in Calgary, in Canada or USA, you can buy right now. So they are at the dirt cheap level. Like CNRL is the best
Thank you.
company, Suncor
What
and IPL. These are the good company uh, which you can buy and you can keep them. And in fact, I will also be doing those. So those are for long term. You can split your account, your amount into two parts, one for long term, one for short term. For short term, you can play on the swing traders or something like this, you buy and sell. And for long term, you keep the stock and you focus on the dividends. Okay.
Ali bhai, can you tell us what stocks have given dividends? Like Suncor, we have heard the name, but banks and anything what you have studied till now. I know you are an expert on energy. So like Suncor, and the other you mentioned was I forgot the name.
Canadian IPL and CNRL.
So these all Canadian stocks are good to buy for the oil if I want to invest for at least a year. They're all good. Like
Yeah, they are good for now because they are at dirt cheap level.
okay, and well, which is the cheapest stock among these ones, like
You
Suncor,
have to
IPL, and all?
you have to check the market, but Canadian stocks or US stocks, um, when you see on the investing.com, you click the trigger and you will see the price.
Okay.
So you will find which one is this. So I'll share the screen one more time. And just to show, do you have any other question, any other guy? So then before I go and share one more thing with you guys.
Heather, by exchange traded funds, are they traded same way as the regular stocks?
Yes, they are traded as same with you can consider them as a stock, but the ETF. after the question, please mute yourself so we can talk. Somebody has unmuted, so I can hear sounds. Okay, let me mute all together once. So the ETFs are same as the stocks, but risk is there. ETFs fluctuate, they are more volatile, and they depreciated every month. So you cannot hold ETF for longer period of time. You will lose your money. Sometimes they just abandon. They say, okay, we are just actually deleting these stocks. So be careful on that. You need to know what you're doing. So who has the question? I think. Okay, Sayed, I can unmute you. Yes, Sayed.
So for a very beginner, like, is it good to open a direct investing trading cash account or a TFSA stock trading account? Because I already have a TFSA account, and I think it's a normal one, not like a stock trading one. So if I wanted to start trading, is it good to convert my TFSA to stock trading and then start buying, or open a new TD direct investing account and start trading?
So regarding the TD account, if you have a TFSA account, if you want to buy a different account, you can still buy, you can still open, and you can transfer money between the accounts. There is no issue. So you can online transfer money within seconds from one account to another, do the transaction, move it back. And your second question, TFSA. This TFSA, you can still do the trading. You can buy and sell the stock like normal. Only thing you cannot do, you cannot do the option trading. But the stocks and ETFs, you can still do it. There is no issue.
Thank you.
Okay. Any other question from anyone? I see.
Yes, I have a question.
Okay. Go ahead.
Uh, so let's say in case someone has got this direct investing account, and then whatever the profit they get it, they convert it into the tax-free saving account or something. That could be possible, or no? That has to be. Is that their direct investing account? How do we get that taxed? They taxed every year, or how does that get taxed?
You will be paying tax at the end of the year, and you have to provide the information to your accountant, and he will actually do that. I'm coming to you, Arushi. Uh, so you will be paying at the end like you do for your other taxes, but you have to tell to your account that your accountant should know what trading you have done. At the end of the year, the banks send you the the tax document which has all the transactions. So you have to send this to your accountant, and your accountant will calculate for you. Yes, Arushi.
Uh, so the TFSA account I was reading somewhere is not taxable. Is it true?
Yeah, yeah. Whatever you earn in that account, it's tax free. You are not going to pay tax.
Okay, so so I should, it means invest in TFSA rather than RRSP, if I have to put some more funds into it.
This is the accounting philosophies. RRSP is a different thing, and TFSA is a different thing. Although you can still save in RSP, you still have to pay tax when you withdraw the money. But in the TFSA, even you withdraw the money, you don't need to pay tax.
Okay, okay. And on an average, how long should you hold an ETF?
There is no standard limit, but it is not recommended to hold more than 1 week. Uh, but if you have a good grip on stock trading, then you can play around. I won't actually say no, but it's not a good idea, especially for the beginners. I will not suggest you guys to jump into the ETFs.
Okay, okay, okay. Thank you.
So any other question from guys before we adjourn?
Can you please arrange one more session for the first one, which you did it last time, if possible, for the beginner?
I'll try to do that. That was the good session for guys to understand the company's strength and company's values, how you should actually focus on the companies. So I'll try to do that.
Yes, I want to do that, please. Thank you.
Yeah, I'll do that. Yes, Rishi.
Ali bhai, if you cannot like hold a session like just my previous person who said to you, or you can share us the link because if you don't have time, I can understand you must be busy as well. Then at least share that link to us so at least we can listen to the link and understand something more.
Okay, I will. I think I will do that. I have a recording, so I will share with you guys. You can learn from that. That was a free session, so I don't care. But
We don't
That is
mind
great
paying.
idea.
Ali bhai, we
but
don't mind paying. We don't
but
mind paying.
yeah, it is a I would request that don't share with anyone. Keep with you if I share. Because I have used some contents from some other resources, so I don't want to share that one too.
I agree with you. Totally agree with you.
Okay, I'll do my best. So this is one thing. I think we have enough questions now. Before we adjourn, I will show you one screen again from the same for your screen stock screening. So I'm on the investing.com again. In my previous session, I mentioned how you should find the stocks. There are multiple websites. Even you Google on the for a stock screener, you will find many websites. It will give you the lot of terms. In the investing.com, in the first market session, if you go to the stock, there is a stock screener. So if you click the stock screener, uh, it give you option what kind of stock you want to select. So for example, you don't know about the PE ratio and these because I explained it during my previous session. So you would learn that. But somebody asked me about the dividend. So for example, you want to invest in a company which has the dividend of, let's say, $5 or something. Uh, you can set your range. If a company has a dividend of 2 or 3, these are the companies which give you dividend of $2 or more, whatever set you set the range. So there are a lot of options even in the RSI, in the technical. So you can select which account has the RSI less or more. You need to learn about the RSI too. So these are the RSIs. So it will give you the list of the accounts. You can select the exchange from here, which exchange you want to check, the Canadian, and then there is a United States also. So then you have to explore, you have to do your analysis, then you have to make your call. This is what I wanted to share. Uh, and we'll see if anybody willing to pay some monthly fee. I will be helping you on that too. But this webinar is not for my marketing. It was just for free for your learning, but just to let you guys know that I do provide this service to my client on some monthly fee because I'm spending my time. So if anybody would be interested, just let me know, and I'll see once I get another badge, I will include you guys. So right now, my badge is full. I may have to start another badge if you guys, any of you guys will be interested. So that's it from me for today. I believe if you guys have anything, please let me know. Otherwise, we will just actually close. Okay. So thank you very much. Stay
Thank
tuned.
you.
Stay tuned. And I will be actually conducting some motivational webinars also and some technical webinars also. You will be in my distribution list. So if you will be interested, just join that one too. Thank you again. So see you next time. Bye.